Breaking news here on Martyn Lucas Investor, Kawasaki Heavy Industries, KWHIY. This is a mini review for our members. It's Members Week and I'm giving away free reviews. I'm doing reviews that my members are requesting now in a live broadcast. You see the video running behind me now. They're having a laugh and a chat and I'm doing members events today. From time to time, I will do this for my members. Consider becoming a member and I will give away mini reviews like this. Stocks that we can trend for and rank for on Google and YouTube as number 1 and 2 for the stock. So you will see these videos and people will learn about the stock. Let's get straight into it. Have you tapped the like button? Have you subscribed? Here is Kawasaki. It's being requested right now. I can see it in the live chat by Seth. Seth, this is for you. It's a mini review. Let's look at it very, very quickly. First of all, the numbers. It looks undervalued by 32%, and it looks a reliable intrinsic value as well. There are no warnings on this one with missing DCF valuation, which is good. 32% undervalued. That's good. We like that. Scrolling down, we've seen the revenue recently up by 5%. Let's have a look. There's limited information here, but we will share what we have. 2.7 trillion in assets and 2 trillion in liabilities. Remember, this is not in US dollars. This is in Japanese yen, I believe it to be. So let me just check that. Let me just check a minute. I'm just scrolling down. I'm making this live during a live video. Let me see. Yes, it is. So this is not US dollars. So don't think, wow, that's a massive company. That is not the case at all. I've made this mistake in the past and you need to be fully aware of the currency that we are using. All right, scroll on down and we're looking at the profitability score of the company. It's 45% profitability. So the ROE is increasing, positive gross profit. We're only amber on the other two metrics, positive 3-year revenue growth and positive 1-year revenue growth. Profitability though is quite good, 45%, not too bad. 38%, we've got low DE, long-term solvency is good, short-term solvency is okay. It's positive net debt. That was the issue. They have a bit of debt here. If we scroll up here, you can see 2 trillion, again, not in US dollars. 395 billion is in long-term debt. So they've got a bit of debt, but of course, if rates come down, which they will, that's a catalyst, okay? Anyway, a good side. 14% downside from here, or 36% worst case scenario. It is overvalued at the moment, perhaps. 22% upside on the best case scenario. So even though the valuation is under 32%, we do feel that it's going to drop from here. So you might want to wait for a better time to buy if you are looking to buy this stock. Let's look at some news around the stock very, very quickly. Kawasaki Heavy revving up on energy storage. This analysis gives it a strong buy rating. It's got a strong buy here. There you go. We are seeing the big buys are swarming green tech. Oracle, IBM, Google, and all the rest of it. But also mentioned here is Kawasaki. In this review, I haven't got time to go through the full review. This is a very, very quick announcement for you. This is the report on the last earnings. Kawasaki Heavy Industries reports their results. So Kawasaki Industries EPS of 151.51, revenue of 1,849.29 billion versus 1,725.61 billion a year ago. So we have an increase here on revenue. I think that's it. Only a very, very quick review. So it's an interesting stock, this one. However, it's got to undervalue, but it's a little bit it's not the best time to buy it at the moment, to be fair. I think it needs to drop a little bit before you should buy it, but there is potential growth here. The only concern is the debt position. This is a very, very brief first look at it. We'll do a full deep dive analysis on this at a later time, but today, just a quick look at Kawasaki and the latest news around the stock. Click above my head, down below in the description, over here and over here for Kawasaki Heavy Industries. We'll learn more about this as we go. Until next time, as always, take care of yourselves and each other.